Hello everybody, my name is Alesh Eisner and welcome to the Canadian Money Talk, the channel about Canadian investing and personal finance. Please like and subscribe. I record 2 videos per week, so make sure you ring the notification bell to get notified each time one comes out. This is the first video of a series I am starting on stock analysis. We'll look at various ways I analyze a stock. This is the first of many short videos. Let's say there's a stock you like because you know it, you use its products, you work for it, you understand it, or feel you have some special insight, or because somebody just recommended it to you. Do make sure they are giving you a beaten down stock because they believe it will go up, rather than a stock that went up a bunch and they're just bragging about it. The first thing you want to do is look at the balance sheet. Those who took accounting in high school may remember this. A balance sheet is a snapshot at a moment in time of a company's financial situation. A balance sheet works on the formula of assets equals liabilities plus owner's equity. This is because assets were either bought by borrowing to buy them or by the owners putting the money in. So it always has to balance, hence the name balance sheet. Assets is what you own, liabilities is what you owe, and the net worth, or the shareholders' equity in a company, is the owner's equity and is the difference between the assets and the liabilities, between what you own and what you owe. So for example, if you put $200,000 down on a $1 million home and you got a mortgage for the rest, your balance sheet would look like $1 million in assets equals 800,000 in liabilities and 200,000 in owner's equity. The owner's equity is also your net worth. So balance sheets work for people too. People who put time fixing in the house are adding sweat equity. So if you increase the value of your home by 50,000 by doing the work yourself, you now have $1,050,000 asset. Liability stays the same at 800,000 for the mortgage, and you now have $250,000 in owner's equity. So your net worth went up by that $50,000 that you worked on the house. Now that we understand the balance sheet, let's get back to stocks. Before buying a stock, look over the balance sheet. I look for a couple of things. First is the current ratio, which compares the current assets versus current liabilities. You can probably find it pre-calculated somewhere on your brokerage website for that stock. If you want to calculate it yourself, you can find it in the financial statements in the balance sheet. So current assets are short-term assets which are held for less than a year, and similarly, current liabilities are amounts due to be paid to creditors within a year. As a guideline, the company should have twice the current assets than current liabilities to ensure the company is viable, liquid, and will not go bankrupt if all of its creditors decide to call in their loans all at the same time. Technically, just doing the math, anything over 1 for current assets to current liabilities is fine, but we're looking for the safety margin and want to make sure that they have some liquid assets, liquid cash, that they can pay their bills with. The second thing I look for on the balance sheet is the debt to equity ratio, where we discover how the company's assets were paid for and how much debt the company has. If the ratio value is more than 1, it means more debt than shareholder investment has been used to buy the assets, which could be trouble if the economy slows or the interest on the debt increases. Generally, under 1 is a good ratio, but companies that had to build a lot of infrastructure, such as utilities or anything with real estate, would have a higher ratio, like 2 or 3. Anything past 4 is dangerous. You can find the debt to equity ratio pre-calculated for the stock in your brokerage website. You can also calculate it yourself from the company's brokerage website balance sheet. So these are the 2 ratios I look for on the balance sheet. There's far more information there on the balance sheet, but these are the basics for me. Please look for further videos about analyzing stocks. If you have any requests on what you would like me to cover in future videos, please put that into the comment section. Please like, subscribe, ring the notification bell, and may you have a profitable day.